see time is around 9. From here on, I will be posting gold trade analysis as well. So let's look into gold spot, US dollars. There are two charts where we can see this is the standard chart, and there is another where the Forex.com, and this is ONAD. I would be I would be explaining to you about gold trade analysis in this case, ONAD. And from here, I would be regularly posting on gold trade analysis because even gold is a very good commodity to trade. So let's start with gold as well, guys. So what you can see here on intraday bias is that the market here is very bullish, guys. You can see how bullish the market is. You can see the market here came and mitigated this fair value gap over here. And if you consider this swing momentum over here, and if you consider this to be a retracement, the low of this candle to high of this candle, the market didn't retrace the 0.38 level. So we can't consider it to be a retracement, guys. So we should consider the whole swing here as a single entry. And if you see here, the common point between this to the common point between that, and you can see that market aggressively sold here, came all the way. This is the above is the premium zone and below is the discount zone over here. So you can see the market came and mitigated this discount zone over here. So this is the optimum trade entry. You could have considered a 0.0705 or 708 as well. Your optimum trade entry. You can see the market mitigated this optimum trade entry over here as well. So what you can see is to mark the optimum trade entry zone over here. And I explained to you why you shouldn't consider this to be a swing, guys. If you consider this one single momentum, which broke the structure towards the upside, you can see a clear break of structure. And I'm explaining you on intraday bias, guys. So, and if you try to plot the fib extinction levels, the common point between this, to the common point between this, to the common point between this, so you can target all the way to 1.68 level for you. This I'm explaining you on an intraday basis. The 1.68 level is where you could have targeted. So let's take this out and take this out. So this one swing over here, the market retraced, and this is the discount zone. The market came all the way to discount zone, and in discount zone, you should find the optimum trade entry, or you can consider this to be a fair value gap. Once this fair value gap has been mitigated, only then we should take long positions, guys. And see, in case if you come in a smaller time frames, and you can see this is in a 15 minutes time frame, the market came, mitigated this fair value gap, and even came all the way to this optimum trade entry zone, guys. So what you could have done is that you can see the head and shoulder pattern over here, where the market trying to take support from here, came here, again the head and shoulder. Once if this neckline has been broken towards the upside, is where you could have taken long position, guys. You can see. And even the neckline has been broken with upside, breaking the 200 moving average towards the upside as well. So you can see in a 15-minute time frame as well, where the market here broke the 200 moving average. And let's look into a smaller time frame and see here. You can see this kind of huge impulsive momentum where market failed to make a lower low here. Instead, the market broke structure towards the upside, clearly changing market sentiment from being bearish to bullish. The chalk formation over here. And if you consider this swing momentum, the market sentiment was very bullish. The market didn't even retrace to 0.38 levels and continued very bullish over here. So, and even broke this structure high as well. You can see this chalk formation over here. So either you could have either entered after this kind of swing momentum, guys. So in case if you try to plot the anchor way up levels of the swing over here, once if this anchor way up level is being broken towards the upside, you can see the market here broke the 200 moving average as well as the anchor way up levels towards the upside. You could have either entered your position here, keeping your stop loss just above that candle, and in a daily time frame analysis, you can see you could have traded it all the way. So let's look into a 15-minute time frame and see. You could have traded it all the way towards the upside over here in a intraday bias all the way to 1.68 level, guys. So in a daily time frame, if I show you guys, see, this is where exactly you could have taken head and shoulders pattern, market crossing the 200 moving average, or guys, what you could have seen is that after the market breaking this level over here, guys, you can see clearly the market here broke the 200 moving average, the minus well as 21 moving average towards the upside and closed above that level over here. And even the market broke the fib retracement as well. You can see the 0.5 levels of the retracement. Either you could have entered your long position here, somewhere at the closing price, keeping a stop loss just below this 21 moving average and targeting it all the way to this. And you could have holded on your trade, guys, for 1, 2, 3, 4, 5, 6, 7 days. In a week, you could have holded and you could have made a huge profit in this. And this I'm explaining you on intraday buys, guys, and not in the intraday. In intra, this I'm explaining you on a daily time frame analysis, and you can see how you could have pulled on to your position here, 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 expecting the market to come all the way towards the upside. And let's look here, guys, how the market rejected price from higher levels and closed. Did it close within the range, guys? That's very important to see. You can see the market closed within the range, and the market came all the way towards the lower side as well. So the next day you could have targeted it this low or this low over here. So let's look into a 5 minute time frame and 15 minute time, 5 minute, guys. Let's leave 5 minute time frame and analyze how the market here is behaving. And this was on 22nd of April. This was yesterday's, guys. So I would not mention analyze you because I have already told you on intraday bias how you could have taken the trade over here. Since the market is very bullish, the market reached all the way to 1.68 level. So let me mark the 1.68 level over here. The common point between this to the common point between this to the common point between this. So let's mark the 1.68 level here. This is where you could have targeted it. So I'll be marking the 1.68 level, guys. So and let's look into a 5 minute time frame and see how the market here is behaving. You could have considered the 1.68 as your target, but what you can see here is that this was on 24th, guys. So the market broke this level and the market is trading above this range and 200 moving average support as well. So what you can see here, the market swept this low over here, swept this high over here. You can see the market even swept this high and aggressively sold towards the downside, clearly forming a chalk over here. You can see the market even closed below this level. So you can consider this to be a chalk formation. Market sweeping these highs, guys, and closing within this range over here and forming a chalk over here, clearly signifying market structure shift over here, where the market changed its sentiment from being bullish to bearish. In case if the market sentiment would have been bearish, guys, the market again could have further break this 200 moving average towards the downside and even close below this range as well. But you can see the market here failed to close below this 200 moving average, which clearly signifies some sort of support. But what you could have expected is that the market after this chalk formation could have retraced to zero point 0.5 as well as the zero point 0.6 levels or the optimum trade entry zone and reject price from these levels and continue further selling towards the downside. But here you can see clearly that the market failed to make a lower low. Here you can see the market over here. The market failed to make a lower low. Instead, the market broke structure towards the upside, clearly forming a chalk over here. The market broke this high as well as even this high also. So if you consider this swing momentum, and this swing is very important, guys, since the market aggressively sold towards the downside and formed a chalk as well. So if you consider the common point between this to the common point between this, guys, what we could have marked is the 50 levels or the fair value gaps over here. You can see the market came and mitigated this fair value gap. The fair value gap here has been mitigated, guys. So once the fair value gap has been mitigated, you could have either expected the market to break this low over here or even this low as well. But here you can see if you consider this retracement over here, guys. So what you can plot here is that if you consider the common point between this to the common point between this, you can see the 0.5 levels. If you consider the swing, guys, you can see the 0.5 levels was not been broken towards the downside. So let's try to mark here the low to high of this candle. You can see the 0.5 levels was not aggressively sold towards the downside, and again the market rejected price on these levels and continued further bullish. So in case if you try to plot the daily VWAP level, you can see the market rejecting price over here. So what you could have expected is that the market, after retracing to this fair value gap over here or the 50 levels, the market rejected price from these levels and could have aggressively sold towards the downside, is even breaking this low. And only after the neckline break or 0.5 levels breaking, you could have entered short position, keeping your stop loss just above this candle. In case if the market broke this level, you could have either entered short position here, keeping your stop loss just above that candle and targeting it towards the downside. But you can see instead the market broke structure towards the upside, guys, clearly indicating some sort of bullishness. And if you try to plot the anchor gap level, you can see the market here taking support and heading towards the upside. And instead of making breaking structure towards the downside, the market broke structure towards the upside, clearly changing the market sentiment from being bearish to bullish and a lower chalk formation and market breaking towards the upside and forming chalk towards the upside as well. So what you can consider is to mark the common point between this to the common point between this. You can see the market retraced to 0.38 level over here. You can see a clear 0.38 level retracement. The market came here, retraced to 0.38 level and rejected price from these levels over here. Or what you can consider is this breaker block as well. As you can see, the market came, mitigated this breaker block level And after the market mitigating the 0.38 level or the breakup block level, the market formed another huge solid bullish candle over here, clearly signifying the market sentiment is continuing bullish. So you could have taken long position here, guys, keeping your stop loss just below that candle. I'm not asking you to take position over here, guys. Even though the market broke this neckline over here, you could have taken long position, seeing this kind of rejection candle and keeping your stop loss just below this candle itself. So this was one best entry you could have taken, keeping entry over here once the neckline over this is being broken. You could have taken this, but I'm explaining you to take. You could have taken here, guys, after this momentum also. This was better compared to the trade over here. This is an aggressive buying over here. So for target levels, you could have plotted the extinction levels, the fib extinction levels, the compound with this to the compound with this. You can see you could have targeted it all the way to 1.68 level over here. I hope you're understanding, guys. The 1.68 level is where you could have targeted it and keeping your stop loss all the way and targeting it all the way to 1.68 level. And if you consider this swing momentum and if you consider this to be a retracement, you can see the market retraced to 0.38 level again here. So you can consider it to be a valid retracement. So the market retraced to 0.38 level and even broke the structure towards the upside. But here the market failed to make an higher high um, further. So the market instead aggressively sold towards the downside and formed a chalk over here. You can see clear chalk formation, guys. And what we need to see is to wait for retracement, guys. Once this aggressive momentum towards the downside happened, you can consider even this also to be a chalk formation. Since the market, guys, broke structure towards the upside and retraced here and again broke structure, guys. So what you can consider is even the market breaking this level has to be a chalk formation. So for the first entry, what you could have considered is this momentum over here, the common point between this to the common point between this. So let's mark the common points over here. You can see the market came all the way to this 50 levels or this fair value gap over here. You can see there is a fair value gap over here. The market mitigated this fair value gap or the 50 levels in case if the market is very in a tight range, guys. You can see this is the 50 levels where the market came, mitigated this fair 50 levels and continued further selling. So in case if you try to plot the fib extinction levels over here, the common point between this to the common point between this to the common point between this. So you could have targeted the 100% move over here, the 1.68 level over here, or what you could have holded on is to target it all the way towards the downside. But let's consider it to be 1.68 level, guys, in case if you might have entered it position over here. So let's mark the 1.68 level since the 200 moving average support is over here. So this was one entry where you could have taken, keeping your stop loss just above this candle itself. And you can see the rejection of price here, guys, at 50 levels, and market is closing below the 9 as well as 21 moving average, clearly signifying bearishness. So either that rejection of price from this fair value gap and market closing between these ranges also, guys, between the 9 as well as 21 moving average and below this previous candle, guys. You can see the previous candle range also. You can see clearly signifying bearishness only. So either after this kind of rejection candle, you could have taken short position and expecting the market to come all the way to 1.68 level, or you could have waited for another market sentiment changing, guys. So if you consider this momentum over here, the high to low of this candle, you can see again the market retraced to this 50 levels here, or you can consider this momentum over here, or let's mark the 50 levels over here. You can see the market again retraced to 50 levels, rejected price from these levels, and continued further selling towards the downside. And if you try to plot the fib extinction levels here, the common point between this to the common point between this to the compound in this. So you could have targeted the 100% move. You can see the 1.68 level here and the 100% move both aligning over here, guys. So it's better to take over here. Or what you could have done is to target it all the way to 3.6 level over here. Since the market broke structure two times, guys, you can see the 3.68 level is what we could have traded it, or just hold your position as long as the market is trading above the 9 as well as the 21 moving average, below the 9 as well as 21 moving average, keeping your stop loss just above that candle and targeting here the initial target over here, and the next target is taking short position here, keeping your stop loss just above that candle itself and targeting it all the way towards the 3.68 level. You can see again the market taking support from the order block level. You can see there is an order block, guys, here, the large down candle over here where the market mitigated this order block, so you could expect some kind of support here. So you could have traded it all the way to this order block level as well, not just the 100% or the 1.68 level over here. And you can see after this kind of aggressive selling, what the market is to plot another fib levels over here, the common point in this to the common point in this. And you can see again the market rejecting price from this optimum trade entry zones over here. And the market, this is the optimum trade entry zones over here. And the market breaking and closing below these levels over here, clearly changing indicating the market sentiment being bearish. Again, the market took support, but failed to make an higher high. Instead, with this kind of huge bearish candle over here, you can see this candle over here. This is the daily VWAP level, and you can see this market even trying to break above these levels, but closed below these levels. And this kind of huge bearish candle where the market faced some sort of rejection from this day VWAP level, or in case if you try to plot the anchor VWAP level here as well, you can see the rejection of price from these levels, guys. You can see here the market rejected, here the market rejected, here the market rejected, here the market rejected, clearly indicating bearishness, guys. I hope this anchor VWAP level is helping you guys. So what you could have done is to take a short position here, guys, after this kind of huge bearish candle, keeping your stop loss just above that candle itself and targeting it all the way towards the downside. So you could have targeted it towards the downside, guys. Or after this kind of momentum, guys, you can see if you consider the common point between this to the common point between this, what you could have taken is this fair value gap over here. You can see there is a fair value gap over here, guys, where the market came, mitigated this fair value gap, as well as that's in an optimum trade entry level, guys. You can see this fair value gap over here is in an optimum trade entry, and the fair value gap and the 200 moving average rejection. So again, you could have taken another short position here, seeing this candle rejecting from levels and keeping your stop loss just above that level also. This was one entry. And again, the market came here. Again, this was another optimum trade entry, guys. So if you consider the compound between this to the compound between this, you can see the 0.5 as well as the 0. Optimum trade entry levels here, the 0.705 and 708. Another optimum trade entry zone over here. Again, you could have taken another short position here, keeping your stop loss just above that candle itself and targeting it towards. You can see how many entries I'm showing you guys. I hope you're understanding why you could have easily taken and you could have targeted it all the way towards the downside. So to plot the fib extinction levels of each here, guys, let's try to plot here. First, let's try to plot the fib extinction of this swing momentum over here. So the market broke and retraced to this optimum trade entry zone. So in case if you try to plot the common point between this to the common point between this to the common point between this, so you can see the market came all the way to this level over here. This is the 2.6 level over here. So let's mark the 2.6 level over here. And the next here is to plot this fib extinction level here, the common point between this to the common point between this to the common point between this. So the 1.68 level here is where you could have targeted. So let's mark the 1.68 level over here to mark this fib extinction levels. And let's consider this. After this, guys, what you could have plotted is this fib extinction levels, the common point between this to the common point between this to the common point between this. You can see again the 1.68 level showing some kind of support over here, the 1.68 level, and there is another fib extinction levels where you could have marked is this momentum over here. That's it, guys. So what you can see, these 4 levels over here, guys, showing some kind of support anywhere along these levels is where you could have exited your position. Or what we could have used is the first candle, guys. This first momentum is where we could have used and you could have targeted. I'm just showing you entry levels, guys, how you could have entered the trade based upon risk to reward ratio. That's very important, and that's what I'm explaining to you. And what you can see here, if you consider this swing momentum over here, the common point between this to the common point between this, again the market came all the way to this fair value gap over here, mitigated this fair value gap. You can see mitigated this fair value gap over here and came all the way towards the upside. So let's look into 1 minute time frame and see how the market here could have, you could have taken this trade also towards the upside. You could have even traded the retracement. As you can see, this aggressive selling towards the downside where the market rejected price from this 200 moving average. What you could have done is that the market here broke the structure high over here. This is a clear chalk formation, guys, where the market retraced here and broke structure towards the upside. So if you consider the common point between this to the common point between this, you can see the market came all the way to this optimum trade entry zone over here, rejected price from this optimum trade entry, and continued further bullish momentum. So you could have taken long position here, guys, keeping your stop loss just below that candle or the order block level. And in case if you try to plot the fib extinction level, here's the common point between this to the common point between this to the common point between this. So you could have targeted it all the way to 1.68 level or the 200 moving average is where you could have targeted the 1.68 level and you could have targeted it all the way to this level over here. And if you consider this swing momentum over here, the last up candle before the down move, and if you try to plot the levels over here, you can see clearly the market came all the way to this optimum trade entry zone over here, where price came and rejected from this optimum trade entry and continued further selling towards the downside. and this 200 moving average rejection of price as well. So you could have, after this kind of upward momentum, guys, you could capture this momentum over here, and you can see clearly the market formed a chart over here. This I am explaining you in a 1 minute time frame, guys. And the rejection of price from 200 moving average, and further the market retracing to these levels over here. So if you consider this swing momentum over here, again the market came to zero point 0.5 as well as the zero point 0.6 levels. And if you consider this retracement over here, once if this zero point 0.5 levels has been broken towards the downside, the zero point 0.5 levels being broken towards the downside is where you could have entered short over here, keeping your stop loss just above this candle itself. And this candle itself. And if you try to plot the anchor VWAP levels here, you can see above the anchor VWAP level and targeting it all the way to swing low here. This was not a good price action, but definitely you could have taken and you could have made another short scalp over here. It's based upon risk to reward ratio is what I'm explaining to you. And there were multiple entries also, guys. I can decode everything in a 1 minute time frame and explain to you how you could have taken short trades here as well, and how you could have taken another long trade over here, targeting it all the way to this fair value gap, and another short trade here. And you can see after this, the market came and swept the intraday low, guys. So in case if you consider in here, guys, the market swept this low, swept this high, guys, and closed below this range over here. You can see yesterday's high, the market closed here. And for the next target levels, what you could have targeted is this over here, guys. You can see this is where you could have targeted, and the market came all the way to previous low and targeted it. Came over here and showing some sort of support. So this was our exit, guys. In case if you might have entered your position here, this is where you could have easily exited your position, or the 4.26 level. After the 3.6 level is where you could have exited your long trade, short trades over here. So I hope you're understanding, guys, how I usually trade on Bitcoin as well, based upon risk to reward ratio only, guys. You can see how my risks are. Just one candle stop loss is my always my risk, guys. Once if that candle is hit my stop loss is bit, I will definitely exit it and I will try to analyze it in every possible way. And I would like to correct it also, guys, in case what made my decisions wrong also. There are chances that even my one candle stop loss also will be hit. So I would like to go and decode it and I will analyze it. Only through practice only you can make this kind of decisions, guys. So this is about my trade analysis. And even this in a 5 minute time frame I have traded. I'd even traded towards the upside in a 1 minute time frame as well. So keep expecting this kind of rejection also. So you can see even the retracement in a 1 minute time frame also is a very good risk reward ratio where you could have traded towards the upside. But the overall sentiment is bearish. Again, the market continued further selling towards the upside. But usually, whenever the market sentiment is bearish, guys, don't try to take this kind of upward momentum. But this is just for me with a lot of experience. You could have taken that trade also. But that's it, guys. That's it about my gold analysis. So I think you're understanding what I'm saying. This is a clear picture of how I usually trade my gold, guys. So in case if you find my videos helpful, please like, share, and comment. Share with your friends and family as well, guys, and keep supporting. From here on, I would be uploading gold trade analysis also. So keep supporting my channel as well. Thank you.